In today's video, I'm going to show you the exact step-by-step plan to build long-term passive income through dividends, even if you're restarting with just $10 or $20. We'll break down the math, the strategy, the mindset, and the action steps you can begin today. This is the same approach millions of investors use to slowly and steadily turn small investments into real monthly income. So if you're ready to take control of your financial future, let's start your journey right now. What if I told you that with a simple strategy, you could build a portfolio that pays you $1,000 every month, even while you sleep? And no, you don't need to be rich. You don't need experience. And you don't need to be an expert investor. You just need to start. Start with one simple step. Open a brokerage account. If you want to begin investing, the very first step is incredibly simple. Open a brokerage account. A lot of people think investing is complicated, but in reality, everything starts with this one action. And the best part? It takes less than 10 minutes. So what is a brokerage account? Think of it as a digital wallet where you can buy stocks, ETFs, or dividend-paying companies. Just like you need a bank account to save money, you need a brokerage account to grow your money. The process is easy. You choose a trusted online broker, create an account, verify your identity, and deposit your first amount. That's Italiano. Once your account is ready, you unlock the world of investing, from big companies like Apple and Microsoft to stable dividend stocks that pay you every single month. Most people delay investing because they overthink it. But remember, you don't need a lot of money. You don't need advanced knowledge. You just need to start. This first step is the gateway to financial freedom, because the sooner you open your account, the sooner your money can start working for you. And years later, you'll look back and realize this small step was the moment your financial journey truly began. So don't wait. Take action today. Open your brokerage account and start building your future, one small step at a time. 2. Understand the $1,000 month math. Before you start investing for passive income, you need to understand one simple thing: the math behind earning $1,000 per month in dividends. This step is important because when you know the numbers, the goal becomes clear and achievable. So let's break it down. Dividend-paying companies usually pay you a percentage of your investment every year. This is called the dividend yield. Most reliable dividend stocks pay somewhere between 3% and 6% per year. Now let's do the math. If you want $1,000 every month, that's $12,000 per year. So how much do you need invested? If the dividend yield is 4%, you need about $300,000 invested. If you find a safe 5% yield, you need around $240,000. With a higher 6% yield, you need roughly $200,000. At first, these numbers look big, but here's the real secret. You don't reach this goal in one day. You build it slowly with consistency. If you invest just $300, $500 per month, reinvest your dividends, and stay consistent for years, compound growth will start working for you. Every month, your portfolio grows. Every year, your dividend income increases. And eventually, that dream of $1,000 a month becomes your reality. The math shows you the path takes time. It takes discipline. But it's absolutely possible. And millions of investors have already done it. Once you understand the numbers, you stop guessing and start planning. And that's how you turn a big dream into a practical, step-by-step strategy. 3. Choose high-CH dividend stocks. ETFs. Once you understand the math behind earning $1,000 a month, the next step is choosing high-quality dividend stocks, or ETFs. And this step can make or break your entire investing journey. You see, not every dividend stock is safe. Some companies pay high dividends only because their business is struggling. But real wealth comes from choosing strong, stable companies that have a history of paying and increasing their dividends year after year. So here's what you should look for. First, choose companies with a long track record of dividend growth. These are known as dividend aristocrats, or dividend kings. These companies have survived recessions, inflation, and market crashes, and still kept paying their shareholders. Second, check their payout ratio. This tells you how much of their profits they use to pay dividends. A healthy payout ratio, usually below 60%, means the company can sustain its dividend, even during tough times. Third, focus on ETFs if you want simplicity. Dividend ETFs like broad market funds or high dividend ETFs give you instant diversification. Instead of buying one company, you buy a basket of companies, reducing your risk while still earning steady dividends. And finally, think long-term. A high-quality dividend stock or ETF is not about quick profit. It's about building a stable, growing income stream that pays you for life. When you choose quality, the dividends take care of themselves. They grow slowly, steadily, and predictably. And this is how you build a portfolio that supports your future with confidence, security, and long-term growth. 4. Start with whatever you have, even $10 or $20. A lot of people delay investing because they think they need hundreds or thousands of dollars to begin. But the truth is simple and powerful. You can start with whatever you have, even $10 or $20. In today's world, most brokerages offer fractional shares, which means you don't need to buy a whole stock. If a stock costs $200, you can still invest with just $20. If an ETF costs $150, you can buy $10 worth. Your money still grows, still compounds, and still earns dividends. And here's the best part. What matters is not the amount you start with, it's the habit you build. When you invest small amounts consistently, something incredible happens. You develop discipline, you learn the market, you get comfortable with volatility, and slowly, your portfolio grows from a few dollars to hundreds, and eventually to thousands. Every big investor you admire started small. No one becomes financially free overnight. But the moment you make your first investment, even if it asks just $10, your journey officially begins. Because that small amount is more than money. It represents your commitment to your future. It is proof that you taking action while others are still waiting for the perfect time. And here's the secret. There is no perfect time. There is only today, and whatever amount you can invest right now. So don't wait for a bigger paycheck, a bonus, or the right moment. Start with what you have. Be consistent. And watch how those small contributions turn into real wealth over time. This is how you build momentum. This is how you build confidence. And this is how you eventually build a portfolio that pays you passive income every single month. 5. Reinvest every dividend automatically drip. If you want your portfolio to grow faster and reach $1,000 a month in passive income, there's one powerful strategy you must use. Reinvest every dividend automatically. This is called DRIP Dividend Reinvestment Plan. Here's how it works. Whenever a company pays you a dividend, instead of the cash sitting in your account, the money is automatically used to buy more shares of the same stock or ETF. You don't have to click anything. You don't have to make a decision. It happens automatically in the background. And this simple habit changes everything. Why? Because every extra share you buy earns its own dividends. Then those dividends buy more shares. And those shares create even more dividends. This cycle continues month after month. And it's how compound growth becomes your best friend. Think of it like planting a tree. Your first investment is the seed. Your dividends are the new branches. And DRIP helps those branches grow more branches. Over time, you don't just have a tree, you have a whole forest. The best part? DRIP works even if your dividends are small at the beginning. Maybe you earn just $1 or $2 per month. That they say? Fine, as long as you reinvest everything. Those tiny amounts grow into big amounts over the years. Most successful dividend investors say the same thing. DRIP is the reason their portfolios grew bigger than they expected. So, turn it on. Let your money automatically buy more money and stay consistent. This one habit, reinvesting every dividend, can turn a slow-growing portfolio into a compounding machine that builds your passive income on autopilot. 6. Avoid high-yield traps, 10% to 20%. When people start investing for dividends, they get excited when they see a stock paying 10%, 15%, even 20%. Dividend yield. It looks tempting. Almost too good to be true. And here's the truth. It usually is. These extremely high-yield stocks are what we call yield traps. On the surface, they look like they'll make you rich quickly. But deep down, something is usually wrong with the company: falling profits, heavy debt, or a business that's slowly collapsing. Here's what most beginners don't know. A dividend is only good if the company can actually afford to pay it. And when a business is struggling, the share price drops. When the share price drops, the yield goes up, making it look attractive, even though the company is in trouble. And what happens next? The company cuts its dividend, your monthly income drops, and your investment value crashes with it. This is why professional investors avoid extremely high yields. It's not about getting the biggest number. It's about choosing a stable, sustainable income that will pay you for years. Instead of chasing 10% to 20% yields, focus on strong companies with 3% to 6% reliable yields, healthy financials, consistent earnings, a reasonable payout ratio, a history of dividend growth. These are the stocks that survive recessions. These are the stocks that keep paying even in tough times. And these are the stocks that will help you reach $1,000 per month without risking your hard-earned money. Remember, slow and steady is safer than high and risky. A stable 4% yield that grows every year will outperform a collapsing 15% yield every single time. So be smart. Avoid high-yield traps. Choose quality over quick returns, and your future self will thank you. 7. Build a monthly paycheck strategy once you're investing in high-quality dividend stocks and reinvesting your income. The next big step is creating a monthly paycheck strategy, a system that gives you reliable cash flow every single month. Because here's the truth. Not all companies pay dividends monthly. Many pay quarterly, every 3 months. So if you want steady income, you need to structure your portfolio the smart way. Here's how you do it. First, divide your investments into 3 groups, based on when they pay dividends. Group A: January, April, July, October. Group B: February, May, August, November. Group C: March, June, September, December. By building a portfolio with stocks or ETFs from all 3 groups, you'll receive income every single month, just like a paycheck. Next, include monthly paying ETFs. These funds distribute dividends 12 times a year, making your income smoother and more predictable. Even adding 1 or 2 monthly payers can fill the gaps in your calendar. And finally, keep your strategy balanced. Don't put all your money in one company just because it pays in a certain month. Diversify across sectors and industries so your income stays stable, even if one company reduces its payout. The goal is simple. Turn your portfolio into a machine that pays you every month, not once in a while. When your dividends start landing consistently, something powerful happens. You begin to feel in control. Your investments feel like real income, and you start seeing the progress toward your $1,000 per month goal. This is how retirees create financial freedom. This is how investors build predictable cash flow. And this is how you can turn dividends into a monthly paycheck, one smart step at a time. 8. Set a realistic timeline. One of the most important parts of building a $1,000 per month dividend portfolio is setting a realistic timeline, because wealth doesn't grow overnight. It grows gradually, consistently, and predictably. Most people fail at investing not because they choose the wrong stocks, but because they expect results too quickly. They want $1,000 per month in a year. They want big profits instantly, and when it doesn't happen fast, they quit. But here's the truth. A strong dividend portfolio is built over years, not weeks. So what's realistic? If you invest steadily, let us say $200 to $500 per month, and reinvest every dividend, it usually takes 5 to 10 years to reach meaningful monthly income, and that's normal. That's how real investors build wealth. Your timeline depends on how much you invest each month, the dividend yield of your portfolio, whether you reinvest consistently, how patient you are with market ups and downs. If you start small, maybe $20 or $50 per month, that's perfectly fine. Your timeline will be longer, but your progress will still be real. The important thing is that you stay committed. Think of this as building a house. You don't finish it in one day. You lay bricks, one at a time and over years. Something big grows from those small actions. And here's the best part. The earlier you start, the easier it becomes. At first, your dividends are small. A few cents, a few dollars. But as your portfolio grows, your dividends grow with it. Eventually, your money starts working harder than you are. So, set a realistic timeline. Don't rush the process. Don't compare yourself to others. Focus on consistency, not speed. Because if you stick with it, one day you'll look at your account and realize the slow, steady approach actually worked. And that $1,000 per month you once dreamed of is now your reality. 9. The Today Plan Action Steps. After learning the strategy, understanding the math, and building the right mindset, it's time to move from planning to taking action. And that's where the Today Plan comes, in a simple set of steps you can follow right now to begin your journey toward earning $1,000 per month in dividends. Because nothing changes until you take the first step. So here's what you should do today. Step 1. Open your brokerage account. If you don't have one yet, this is your starting point. It takes 5 to 10 minutes. Choose a trustworthy broker, verify your identity, and get set up. This one action opens the door to wealth building. Step 2. Choose one dividend stock or ETF. Don't overthink it. Pick one high-quality dividend ETF or a stable dividend stock. You can always diversify later. Right now, the goal is to start. Step 3. Invest any amount. Even $10. Don't wait for the perfect amount. Buy fractional shares if needed. The goal is to make your first investment today. Step 4. Turn on DRIP. Enable automatic dividend reinvestment. This small setting will grow your portfolio faster than you think. Let your money buy more money automatically. Step 5. Write down your monthly goal. It can be $50 a month, $100 a month, or your big target, $1,000 a month. When you write your goal, your plan becomes real. Then break it into smaller steps, like investing $50 or $100 per month. Step 6. Commit to your first 30 days. Tell yourself, for the next 30 days, I will invest consistently, no matter what. This builds discipline, the most powerful skill in wealth creation. The Today Plan works because it removes excuses. It pushes you to start now, not later. And once you take the first few steps, momentum begins to build. By the end of today, you can be officially on your path toward passive income, a path that leads to financial confidence, financial freedom, and eventually a portfolio that pays you every single month. Start today. Start small. Start now. Dismotivate with the long-term vision at the end of the day. Investing isn't just about numbers, charts, or dividends. It's about your future. It's about the life you want to build and the freedom you want to experience. That's why the most powerful part of this journey is keeping your long-term vision alive. Close your eyes for a moment and imagine this. You wake up one morning and check your portfolio. Your dividends deposited while you were sleeping. Your money worked for you even when you didn't lift a finger. That's the life dividend investing can give you. But it doesn't happen overnight. It happens because you stay committed. You stay patient. You focus on the long game, not quick wins. Think about what $1,000 per month could do for you. It could pay your rent, cover your groceries, take care of your bills, or even fund your dreams. Travel, education, family support, anything. This is why you invest. Not to get rich fast, but to build a future where money gives you choices, where your time belongs to you, where financial stress doesn't control your life anymore. And yes, there will be ups and downs. The market will rise and it will fall. But your long-term vision is what carries you through the difficult moments. Every $10 you invest, every dividend you reinvest, every month you stay consistent, brings you one step closer to that vision. Remember, you're not just building a portfolio, you're building freedom. You're creating a life where your money works harder than you do. So stay focused. Stay committed. And keep your long-term vision in front of you, because the future you read dreaming of is absolutely possible. And one day you'll look back and say, I'm glad I started, and I'm glad I never gave up. Thank you for watching. If this video helped you understand how to build real passive income, then take the next step. Start today. Your future self will thank you. Remember, you don't need a lot of money. You just need consistency, patience, and the courage to begin. If you want more guides on investing, dividends, and financial freedom, make sure to like, subscribe, and share this video with someone who needs it. Your journey to $1,000 a month starts now. Stay focused, stay disciplined, and I'll see you in the next video.